My guest today is Elliot Gu. Thank you, Elliot, for joining me. Good to see you again.
Good to see you too. Thanks for having me.
So at the show here, you've been getting questions on master limited partnerships, and you want to talk about how the industry is doing right now. Are we still seeing merger and acquisition activity in there, or do you have any favorites? Well, they're mostly oil and energy companies anyway,
Right.
but do you have any favorites in there?
Sure, the MLP industry has been doing very well. Of course, it's a high yielding group. The average
Sure.
MLP yields about 6%. And that's been very popular because there are not many income investments out there.
Right.
Of course, when interest rates ticked up a little bit, the sector did pull back. I think that's less of a problem long term because one of the things that MLPs have that, for example, bonds don't offer is a potential for growth and distribution over time.
Sure.
Unlike a fixed income product, your average MLP is probably growing its payout at 6-7% a year. Some of them a lot higher than that. So a lot of the MLPs we're looking at right now are parts of the industry where we're seeing more growth, where we see the potential for faster than average distribution growth.
And what sectors would that be in?
Well, actually, some of the ones that we've been focusing on lately have been non-traditional MLPs. They've been in areas, most MLPs are involved in the pipeline business or some storage. One example is High Crush LP. This company, HCLP is a symbol. The company makes or mines proppant. Proppant is basically sand that's put in fracturing fluid when you fracture an oil or gas well. What it does, when you fracture a well, you're basically artificially creating cracks in the reservoir that help aid the flow of oil or gas into the well. Proppant actually keeps those fractures open once you relieve the pressure of on the fracturing fluid. And most proppant in the country is about 75% is raw sand. And they have a bunch of mines in Wisconsin, which, believe it or not, is the Saudi Arabia of proppant sand.
That's interesting. I thought it was just cows and cheese.
Right, exactly. It's about 80% or more than 80% of the proppant sand produced in the U.S. comes from the state of Wisconsin, and more than 90% comes from that part of the upper Midwest. They own a couple of mines there, very low cost of production, access to unit trains, which allows them to very cheaply move proppant sand from their mines to their customers.
I was going to ask you that if that was the mode of transportation.
Yeah, that's typically the mode of transportation. And with a unit trains are kind of like an express service.
Okay.
So it's kind of like being on the express lane of the highway. They don't stop the train to add additional cars from other companies. So it moves with a faster velocity. And they also have a lower cost per train carload, whereas they obviously have a lot more carloads than average. Your average well in the U.S. might have 500 tons of proppant in it when you fracture it, your shale wells. So it's a lot to move, so they typically do use rail to transport that.
Yeah.
Has over an 8% yield, and I think it'll probably be able to grow at about 10-15% annualized in the next few years.
Now, what's the approximate price of it right now?
HCLP is trading up in the $25 area, and I would look to buy it under that level right now.
Okay, super. Well, thanks for joining me.
Thanks for having me.
And thanks for being with us on the MoneyShow.com video network.